Good evening. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up, and this is for Tuesday, the last trading day of June 2020, and we are also looking at the last day of the month. So a lot of what I'll call window dressing. What does that mean? You know, I've been at this, I became a registered futures broker in 1969. Then I became, in the 80s, a stockbroker. I got my FinOp licenses. I owned a brokerage company, stocks and futures. So I've done it all. And still I'm doing it in the futures, not the stocks any longer. It's zero commissions in that game. I'll leave it to the big boys. But I did see TD Waterhouse today, and the president was on there. And, you know, he's so honest. I loved it. Loved the man. And he explained, what you think you're paying zero for, you're not. They're selling your order, and when they sell that order, you're not getting what is available necessarily, in my opinion, at the best fill. It could be the best retail fill, but not necessarily the best fill. And you cannot trade for customers for free and stay in business. Somewhere there's got to be a revenue stream. You feel better because you don't see commission that you paid on your statement. I get it. I understand people don't like paying for things. There are no free rides. If you believe it, love it. Buy some bridges. All right, let's look at what's going on here. We had a green day, and the market feels good about what's going on. We had good economic data as a group, not all parts. The retail sales were not pretty. I like that home prices are climbing. I think we're going to see that home sales are going to look good. There's plenty to it, but there's also plenty bad. And the bad is yet to show. Really, you're going to see in local areas a lot of bankruptcies. We're getting it in Chicago. They're just starting to happen in the restaurant business. We're hearing more and more companies, some top-end restaurants gone. They can't make it work. If you got seating for 50 people and you're supposed to make it work, as an example, with 25 people, isn't going to happen. The layout doesn't work. The cooks are too close together. A lot of companies got to close. Now, you'll say the big grand restaurants will stay open. Really? Chuck E. Cheese isn't in business. Somebody's going to gobble them up. I can go through all these franchise changes. Don't buy what you're hearing. Empty is empty. And when the PPP runs out, we have a problem. How will they do that? I don't know. I was actually surprised that today on the taxes that they didn't extend it until later on when all these programs come to an end. But instead, they're going to make you pay your July 15th tax or get a penalty. Okay, you think that that's giving a lot of people out there a break? I have my own opinion, but whatever. All right. So in looking at all this, a lot of green. What we saw the TLT drop off. We saw the gold market up though. We know we're going to get the Fed minutes this week. In the mornings, as I do, my morning futures line or my afternoon, which I've already done, SPDR ETF subscriber video. I've already told everybody all the reports coming out tomorrow and what they're going to be estimated at and what the trade's looking for. When we come to the XLK, we have spent the better part of right here from May through now going basically sideways against the blue line, which is the old high that we had made at 102.94. The hardest thing to do in this market is be short, and you don't hear me saying be short, is to be short the tech area, the FANGs, the QQQ. The tech sector. Very difficult to do that. These markets are the value areas. At least people think they're the value areas. They think that they're the growth areas. They don't worry about the PEs. They're just looking that this is where the growth is going to continue to be. Okay, I'm not arguing it, just explaining it. When we look at the swing line, we have a higher high, lower low. Let's throw the name of the chart off. Is that a trend? It is not. Let's take and put the 18-day average on the chart. What number do we keep hitting? That number. What's the bias? I define bias as the relationship of current price to the 18-day average. If it's over it, the bias is up. If it's under it, the bias is down. Here's why that's important. It triggers, the way that I teach in my charting course, other indicators. So if I have another indicator that's bullish, but the bias is down, the two say no, they're not in sync with each other. To get them in sync, you have to have this up. but the swing line's not with the trend, so I have nothing to do. Then I look at Bollinger Bands. Why? Because it's an algorithm that will keep the market contained in price 95% of the time. At its high or its low. You think that's not important? I do. You can't have it 100% because it'll never hit the price. So you've got to find a number you're comfortable with that it hits it often enough so that there's an exit point for you. I am assuming when the market goes to the upper Bollinger Band, because the bias is up, if other indicators, and I'm talking the technical indicators, are pointing up, you're long, you're coming out there. If it falls to the lower one, the same thing. I'm always looking at momentum because momentum often leads price. Now, I wish I could say it always does. It doesn't. We have an indicator called the Arun indicator on our website, and it has to do with measuring price and time. It tells you when an indicator is getting out of sync with itself. Very important tool. But in any case, higher high, lower low, a market that if we look at it, overbought, why do I want to be involved? When I come over then, and this is the SMH, I forgot to fix that from yesterday. SMH, I have the lower low, the higher high. What do I think of that? No trend. Caught at the 18-day average, everything fighting itself. Again, an overbought market. I'll let somebody else carry these trades over the weekend. That's my thought process. What about XLI? Well, we're coming out of an oversold condition in a correction. The market's been in a downtrend, couldn't make it to the Bollinger Band, but it's given opportunities galore if you were short and wanted out to come out against the 100-day average. Sometimes other averages all of a sudden take over, and you can see how that worked there. You can see how when you got under, how it worked, crossovers of the 100 and 200-day average, and of course on the big rallies, the 200-day is the ruling king. But the 100 seems to be the support average here. And the market is telling me, well, if you rally to the 18-day average of closes, where often markets go to figure out the next thing, you have to take out 69.83. If you take that out, you've lost a downtrend. I don't think the pros will sell rallies. I think what they'll do is nothing because of the oversold condition. On the energy sector, we have an outside day up, but there's something else at work. Do you see this reading? This is called embedded. What is embedded? The slow stochastic is unique in that it travels between overbought and oversold areas. Now, the traditionalists call the 20 area the oversold and the 80 overbought. I don't. I have my own different version of it. The second thing, the market, when it gets under the traditional version, it just stays oversold or it stays overbought. I can prove it doesn't, and I proved it to the developer of this, and he agreed. I found something that was interesting. He used the word interesting, but I think he understood. It was George Linn that I had talked to on it. And if the red pops over 20, what I expect to happen is the market to make a run right away to the 100-day average, very possibly the 18, ending the downtrend. Is the trend down any longer? No. Coming in it was, you had lower highs, lower lows, and an embedded reading, right? You had both numbers under 20, both under 20, and the day before that, let me get there, under 20. So that part worked. You still have them under 20, but you closed at the high of the day on an outside day up. That's a warning sign that when the market reopens at 8:30 in the morning, you can lose that if the energy sector ticks higher. So the pros, I think they're still short. But I think they'll be watching then. If they see that it hits that, gets out of it, I think they'll clear the decks on this. If it just drops, I think they're going to go, we're still fine in our position. QQQ has been going sideways. It broke its uptrend when this low was taken out, right back here. That stopped the pattern of higher lows, higher highs, right into the upper Bollinger Band. You know what I teach you here? Hit the Bollinger Band, it's where I think pros take money off the table. How much? Well, I'll let you figure that out. I know how I teach it. Now, you took that out. You're out of your uptrend. Market correcting at that point, goes back to the 18-day average, fighting a battle. It's never thrown out a sell signal. It's thrown out it's not in a bull trend signal, and that's still what I see it doing. The EFA, the emerging markets, you have some divergence. You have momentum trying to drift higher, a trend down. If you take out 61.29, I think you scare the bears out of the market. If that's not taken out, I think they're still looking for the 59.20 area, the lower Bollinger Band. Interesting ploy right here. Gold, still very bullish. Embedded reading. Higher lows, higher highs. If it can continue up, target the upper Bollinger Band. It'll be higher than this tomorrow. So keep your eye on it when you see the first print. It's going to jump. In the gold miners, you hit the upper Bollinger Band, but you're overbought. Now, why are the miners coming up? Well, let me think about this. I'm a gold miner and I have a lease, or I own my land, and there's gold under the ground. And this market keeps going up in gold price. So let me see, is my mining company worth less or more? Well, certainly one of its assets is worth more, right? If you don't own the gold and you're just mining it for somebody, different game. You can see where the market's at there. In TLT, I'd be very careful here. We're going to get the FOMC minutes coming out. I think it's Thursday. I forgot if it's tomorrow or Thursday. Pardon me, but check on it tomorrow. But I think it's Thursday. And from the looks of it, why do you want to go through that? We don't even know what they say. We know that everybody says, well, okay, we're not considering it. Do you think the Fed didn't talk about it? I don't know. I don't know if they're in the minutes. If they did, how's the market going to react to it? What was said? So I think the market went into a stall today with an outside day down. I think the uptrend on the swing line broke today, but you still have the embedded reading and it rules the day. That's the factor. Until that red line closes under 80, I think that the bulls got nervous today, but I think that they're basically still on the bull side of the market. Last, we get to the FXE, and in this market, we're just stalling. I wouldn't be surprised if we get back to the 18-day average to fight a battle. Now, the action here is interesting. If you get over 106.40 and close over that number, and don't get under 105.67, you could have higher lows, higher highs. Why am I not talking the bear side, which is in place? Because it's already oversold. An oversold market that throws out higher lows, higher highs with upside bias, if that starts turning up, you get into an interesting what-if scenario. I talk about this and a lot more in my SPDR ETF videos. They come out about 4 in the afternoon typically. I was late today, but that's the typical time. I go through 35 charts right now. I'm going up to 40. You get a lot of more information than you do here. I cover what's coming out in the morning in the reports. I'm going to give you all the different sectors that you look at in the market with very specific. I want you to buy here. I want you to buy there. I'll talk what I think the pros are doing, but I'm going to talk to you what I think you should be doing. I'm Ira Epstein. Just go to our website, www.iraepstein.com. Under what? Research. You'll see it all there. You have a good day.